Good morning. My name is Antonio Campaña. I'm the director of the Columbia Global Center in Santiago. The Santiago Center is part of 11 centers worldwide that serve as Columbia's physical and intellectual gateway to the world. The center is committed to sharing Columbia's remarkable scholarship, expertise, and resources to address global challenges and inspire intellectual discussions worldwide. Over the years, the Santiago Center has positioned itself as an intellectual bridge between the academic communities. It enables knowledge sharing and facilitates projects on relevant global and local public policy topics, such as climate change, responsible mining, journalism, humanities, global health, and education. The center's initiatives have had relevant implications for advancing knowledge and public debate in the region, and also promoting collaboration between Columbia University and Chile. Today's event shows the center's desire to advance debate on a topic of public interest. It also highlights the forthcoming world political and economic scenarios and the repercussions for Chile. A week after the US presidential election, several questions arose. How will the results of the election shape the global dynamics? How will the results of the election affect the geopolitical order? Is the international order under more significant stress? This webinar will address in part these questions. And to begin with, I would like to introduce our first speaker. It is my pleasure to welcome Paula Estévez. Paula is the General Manager of AmCham Chile. She has vast experience in the public and private sectors. She led the Ministry of Energy in designing and executing its international portfolio of activities, including trade and technical missions to the United States. She also worked in the wind turbine industry and energy projects in Latin America for the Columbia University Engineering Center. Paula holds a Master's of Science in Environmental Engineering from Columbia University. Paula, welcome.
Thank you, Antonio. And really, it's a special honor to participate in today's webinar, where we will discuss, as you said, the aftermath of the US election. And thank you, Antonio, for inviting me. As you mentioned, I earned my master's degree at Columbia University, and I strongly believe that Columbia's world-class research and academic faculty have much to contribute to Chile, and also vice versa. And so therefore, it is an honor, as I said, to continue deepening these ties. So just a brief overview of our relationships over the past 18 months alone. We have celebrated the bicentennial of the US and Chile diplomatic relations, the 20th anniversary of the signing of our free trade agreement, and the entry into force of our bilateral tax treaty. So this is really a testament to the deep bond between our countries. So, and just in terms of business and investment, the US is the second largest source of foreign investment in Chile. Furthermore, this is very interesting, the top 3 sectors for US investment in our country are energy, mining, and technology, data centers. So all of which are strategic for both nations. And also from the Chilean side, the US is the #1 destination for exports by Chilean businesses, and also Chilean food products, among other goods and services. So this is not simply about being trading partners. I believe that our countries are strategic partners based on deeply held shared values such as liberty, democracy, and human rights. So in her concession speech, Vice President Harris, I believe that she embodied these beliefs, stressing the importance of upholding democracy and the peaceful transition of power, while at the same time emphasizing that I quote, the light of America's promise will always burn bright as long as we never give up. And our bilateral history demonstrates that the relationship between the US and Chile is deep and strong. And at AmCham, we believe that it will continue to be so throughout changes in leadership in both sides. And in addition to these centuries, all born were also united by shared opportunities, as I mentioned before. At AmCham, we firmly advocate for free trade. Chile has free trade agreements with over 50 countries. And one of the most significant of these is our FTA with the US, which give us a strong foundation for projecting our bilateral trade and investment into the next 20 years. Furthermore, last year, as I mentioned, the US Senate approved our bilateral tax treaty by a vote of 95-2. So this is important because this shows an overwhelming bipartisan support for deepening economic ties with Chile, where, as I mentioned, there is significant US investment in strategic sectors. So US investors in Chile and also Chilean investors in the US have a long-term perspective. To give just a few examples, US energy companies have an impressive pipeline of projects in Chile, while technology companies, US technology companies, are investing data centers in our country. And of course, there's a significant investment in mining for copper and what we call, and also the US, the critical minerals, such as lithium. So nonetheless, each government, of course, will choose its priorities. And one of the most interesting challenges of international relations and diplomacy is engaging in dialogue and finding common points while also maintaining your own values. So, and this will be, of course, the focus of the discussion. As President-elect Trump affirmed in his victory speech, I quote, "We will embark upon a project of national growth and renewal. I will harness the creative talents of our people, and we will call upon the best and brightest to leverage the tremendous talent for the benefit of all. We have a great economic plan. We will double our growth and have the strongest economy anywhere in the world." So I already touched on the context of US-Chile bilateral economic ties. And during this webinar, we will delve into the economic impacts of the election itself and how this may evolve over the next 4 years. So, for example, what economic impact should we expect President-elect Trump policies to have on Chile, a small country with an open economy? And can we expect foreign investments in countries like Chile to grow? Or will investment within the US or in other countries be more attractive? That's some questions that I will leave to the audience. And now turning to geopolitics, in his victory speech, President-elect Trump also stated, quote, "I want to tell the world community that while we will always put America's interests first, we will deal fairly with everyone." So as the 47th president of the US, Donald Trump will certainly have a full range of complex geopolitical situations to face. One is the relationship with China. Other pressing issues involve Russia and the Ukraine, India, the escalating war in the Middle East, and Iran's influence throughout that region, and of course, China and Taiwan. In all of these situations, the policies and decisions made by President of the US will have, of course, enormous global impact. For example, how will an uncertain global environment affect Chile, both economically and geopolitically? For a small country like our own, what it would mean to be part of a world with potentially weakened multilateral institutions. And in that context, what foreign policies should smaller countries consider? So I believe that understanding this scenario is highly relevant for all of us, including the business community, of course, in both countries. So it's really an honor to have with us Markus, Jaeger, to analyze all these countries that I speak to you. So thank you, Antonio.
Thank you, Paula. It is my pleasure now to welcome Dr. Markus Jaeger. Dr. Jaeger is a fellow at the German Council on Foreign Relations in Berlin, a senior advisor at the Atlantic Council in Washington, and an advisor to Windward Observer Consulting Services, which has an office in Santiago. Previously, he was a director at the Deutsche Bank in New York and London and held various advisory and research roles. He has extensive experience analyzing the global economy, international trade and capital markets, and sovereign and political risk issues. His current research focuses on US, Chinese, and European economic statecraft, geoeconomics, and global economic governance. Markus has been a visiting scholar at the European University Institute in Italy and a visiting fellow at the Casa das Gracias in Brazil. He attended Heidelberg University and Sciences Po and holds an MS and PhD from the London School of Economics. Markus, welcome.
Thank you so much, Antonio. And I'd also like to thank the Center for inviting me to give some initial remarks and some thoughts about the implications of the elections. So Jay Powell, the Fed chairman last week said, we don't speculate in the wake of the elections. I think that's probably the right way to take if you're a central banker, but I think we should really try to look forward and see what we have to speculate to some extent. But what I want to do is go beyond speculation, also provide some analysis. And I'm trying to do this along sort of several lines, perhaps not massively consistently. I want to look at what happened during Trump won, what actually happened. Then I want to look or introduce you to some of the campaign statements that were made, which I think have to be taken with a grain of salt. I also want to, wherever possible, look at the constraints the new administration might face, be it in Congress, be it internationally. And ultimately, and I think that's the most important takeaway at this stage is, as they say in Washington, personnel is policy. So we can speculate a whole lot about what will happen. And I think we have a fair idea of what might happen. But what will be very important to watch in the next few days and weeks is who will be appointed to what position. Because the president is a very powerful actor, of course, in the context of the US government. But it's really cabinet officers and lower ranking officials that ultimately implement many of those policies. So this will be very, very key to watch. Okay, so first off, what happened? It very much looks like the Republicans had a clean sweep. That means they will have the White House. They flip the majorities in the Senate. They're going to have 52 senators. And it's almost certain that they will have won the House. Now, these are tiny, slim majorities, so this will impose potentially some constraints around policy, but it is clear that the Republican Party sits in the White House, it has a majority in the House and in the Senate, and also, as we know, the Supreme Court leans somewhat Republican. So this really puts the Republican Party in a powerful position to implement a wide-ranging reform program. Now, what I would say, though, is there are, of course, constraints. Even the most powerful country in the world faces international constraints to what it can do. And, of course, institutionally and domestically, the president and policymakers face constraints, be they legal, be they constitutional, or be they just political. So I want to analyze things along those lines. So first of all, I want to have a brief look at geopolitics. I'll be very broad here. I'll be happy to take any questions you might have. And then I'll look at mostly the economics and the financial implications, and then finally end with a few thoughts on risk and opportunities, particularly for a country like Chile, but really from a very high level. So first of all, on the geopolitics, I mean, it is known that rhetorically the Trump administration is wedded to the idea of America first. This can mean many different things, of course. We'll have to find out or figure out what actually this implies when it comes to China, when it comes to Ukraine, when it comes to international trade. But I think it's fair that if you compare the Trump administration, the first Trump administration policy to Biden, that Biden had a much more alliance-focused policy. It was much more multilateral. It wasn't like massively it wasn't as multinational maybe as under Clinton, but it was certainly an attempt was made to bring allies in board in Asia, in Europe. There was a fair amount of cooperation between the US and Europe on Ukraine, for example. I think it's fair to say, based on the experience of the first Trump administration, that we will see a much more unilateral approach to many of the world's problems. That's sort of in keeping with the America First approach. We'll also see a more transactional approach. So one thing that will inevitably come up, and I'll speak a little more about this later, is international trade. I think there it's not to say that the Biden administration was massively pro-free trade. It wasn't. In fact, it was at the margin also protectionist. But it's still, to some extent, and it didn't really remobilize the WTO either, but there was still a sense of like, okay, we'll talk to you and we'll see how far we can go. The concern, I think, for Trump administration is that potentially, if we take what was said on the campaign trail at face value, the policy will be much more unilateral and much more protectionist. And there will be debates about who pays, this idea that somehow other countries owe the United States money because of the defense relationship. This will be an important point of friction. So I think some of these alliances may come under some strain. I expect them to hold in the end. Again, we'll have to see who gets appointed here. But I think there will be greater friction in these alliances, particularly when it comes to Europe. But I would also expect some friction between the US and its Asian allies. But I think this will only go so far, particularly in Asia, because as we learned over the past few days, many of the appointments, the initial national security related appointments, these are China hawks. So China hawks necessarily will need to rely to some extent on the US alliances in Asia. So again, I think these alliances will come under some strain. There will be discussion and debates, but ultimately they will survive. As I said, on Europe, I think there the frictions are potentially greatest. Again, if we take campaign speeches at face value, there is an attempt there will be an attempt to like settle the Ukraine war. I'm not sure how easy this is going to be, but the Europeans are quite worried about that the US would simply unilaterally try to push Ukrainians to negotiate a peace that Ukraine does not want with Russia. So that puts the Europeans in a tough spot. In addition, the Europeans continue to depend on the US for security. So there will be inevitably debates about defense spending and all these sorts of things. So I expect a fair amount of friction between the US and Europe over the coming months and years, in fact. But I think one thing is very clear at this stage is that the new administration will be very hawkish on China. Now, on the one hand, as I said, this is probably somewhat good news for Asian allies for US allies in Asia. On the other hand, it might also increase the pressure on the Europeans and quite frankly on parts of Latin America to align their policies with US policies, be it on trade and investment. But I'll get to this in a second. One thing I think where we'll see a fair amount of friction also, at least initially, is when it comes to America's relationship with Mexico in particular. Immigration has been a major issue well, quite frankly, in the United States for the past few years, but also on the campaign trail. So I expect the Trump administration to be very hawkish on this, and they will try to put pressure on Mexico, potentially involving the threat of tariffs to get Mexico to like stop migrants coming through Mexico to the United States. So it'll be a fair amount of friction. We'll have to see how Sheinbaum is going to manage this. And also in trade between the US and Mexico, there might be some issues there, not least, yes, in part because of bilateral trade relations, but also the US is increasingly concerned about Chinese investment in China, sorry, Chinese investment in Mexico and Chinese trade going through Mexico into the US. So to the extent that the China hawks are taking over in Washington, I expect some frictions there as well. That said, broadly speaking, I think beyond that, I'll be honest, I don't see, we'll have to see who gets appointed, but I don't see the United States focus shift to Latin America in any way. I think increasingly that's been happening for quite some time. The US sees Latin America as a source of immigration, as, yes, some potential for cooperation on trade and investment. But I think increasingly we'll also have a close look at Latin America and see who cooperates very closely with China, particularly now after what looks like the appointment of Marco Rubio and Mike Waltz to the National Security Council. So I expect some friction there to occur over the coming years. Just quickly on, just as I said, personalist policy. I mentioned Mike Waltz. He's a Florida congressman. He's fairly hawkish on China, strong on national security. So he will be the national security advisor to replace Sullivan. And Marco Rubio, the senator from Florida, will most likely become the next Secretary of State. And if he continues to hold the same views once he is a cabinet official, then we should expect him to be fairly hawkish on Iran, fairly hawkish on Cuba, and fairly hawkish on China. So we'll have to see how that plays out. Just as an aside, one thing I do want to say about NATO, and that's perhaps less relevant for people on this call, but is certainly an important issue for Europe, is that in 2024, Congress passed legislation that that supposedly prohibits the president from leaving NATO unilaterally. Now we'll have to see whether this works, but again, it sort of is in line with my expectation that yes, there are some America First republics in Congress, but there's still a fair amount of like traditional Republicans who quite value alliances, which is why I think is another reason why we can expect these alliances basically broadly to survive. So that's sort of a very brief overview of what happens in globally. So it's a China focus. There will be an attempt made to settle the Russia-Ukraine war. We'll see how far that goes. And when it comes to Latin America, the focus will be on migration, and to some extent trade and investment, but increasingly, I think, through a China focus, and that could become a challenge for some Latin American economies and countries. Now, quickly turning to the economic outlook. Here, you might have noticed the dollar gotten stronger over the past few days. So I'm just going to run you through some of the proposals and what may or may not happen. So first of all, the Republicans controlling the House and the Senate, I think they're going to go for a fair amount of tax cuts. So the 2017 tax cuts that Trump implemented are set to expire in 2025. Most likely, they will make most of these tax cuts permanent, which will add to the budget deficit, and most likely will also add to like higher interest rates. In the short run, this will be expansionary, so it will be good for economic growth, all other things equal. I also fully expect Congress, to the extent that's necessary, but certainly executive, to take action on deregulation. This should be good news for specific sectors, particularly fossil fuels. Elon Musk's companies most likely. But broadly speaking, this should be good for the economy in terms of making investment more attractive for investors. We're good for the stock market most likely as well. But there will be a repeal of some of the ESG provisions in some of the Biden legislation, particularly the Inflation Reduction Act. So there's a bit of a set-off. ESG is probably not going to be all that attractive, but fossil fuels and other areas that the Trump administration favors will do quite well out of this. And there's some wonkier ideas that were floated on the campaign trail. This is perhaps more like inside baseball for economists, if there's such a thing. But there was the idea, for example, of replacing income taxes with tariffs. I don't think that's viable economically, and I don't think Congress is going to go for this. There was another suggestion coming, particularly from the more protectionist folks around Trump. They suggested that they wanted to tax capital inflows. Again, that's fairly wonky. I don't think this is going to work. The idea here being that if you tax capital inflows, you somehow can weaken the dollar, and a weaker dollar would lead to lower trade deficits. Now, the problem, of course, we can talk about this later on, is if you impose tariffs in the first place, most likely the dollar is going to appreciate. So some of the effect that you're trying to achieve is going to be offset by weaker currencies elsewhere. So you're kind of like, to some extent, almost chasing your tail. And then there was another interesting idea, which, again, we can get back to later on, which suggests to me, and that would have been my call all along, that the administration will be still very focused on national security. And so one of the ideas was that Trump threatened on the campaign trail to sanction countries that abandon the US dollar or use the dollar less. I'm not quite sure exactly how he phrased it, but this notion, someone must have mentioned it to him, that countries like the BRIC summit, for example, we saw a few weeks ago, that there's an attempt by other countries, so-called middle powers, but also Russia and China, to diversify their international monetary and currency relations by using the RMB. So that could also be a source of friction potentially going forward. I don't think it's going to be a major thing necessarily in the next few years, but longer term, this could be an issue. And again, he threatened to impose tariffs on countries who might potentially diversify. So this to me points in this direction of the focus of the administration foreign policy-wise, at least among the policymakers, will be on China. And this will impact not just geopolitical relations, but it will also impact third parties that sort of trade with both and invest in the US and China. So this is a risk not just for Latin America, but also for European countries. Now, the big thing really about the Trump administration and the thing to watch is trade. I can't really tell you what exactly is going to happen, but let me remind you of what did happen during the first Trump administration. So I think on the one hand, you can argue there was a lot of noise around trade. So Trump or the administration forced, for example, the Koreans, the Japanese, the Canadians, and the Mexicans to come and renegotiate existing trade agreements. I think Chile was not really on the agenda because generally seen as not running a very significant trade deficit with the United States. These renegotiations went relatively smooth. So there wasn't like massive concessions that were made by the Koreans and the Japanese. There were some concessions, but it wasn't really a complete breakdown to international trade. What we did see, though, on the so-called national security side, we did see the introduction of tariffs on steel, aluminum, and a few other things. So this had a real impact in some countries, of course, but it wasn't a complete breakdown of international trade. Where we really saw the most important impact is on the US-China trade relationships. As you may remember, there was a couple round of like trade protectionism and retaliation. And to this day, the tariffs that were imposed on Chinese imports into the US, they exist. So Biden didn't even like lower or repeal them when he came in. So if that is where we're going in the second Trump administration, then we will get a fairly aggressive protectionist trade policy towards China. Now, how aggressive we will have to wait and see. Trump threatened 60% tariffs. This will be quite dramatic, not just for China and potentially for the US, but also for third countries. So if China can't export to the US, then necessarily some of their exports are going to be diverted to, say, Europe and other places. So these countries will most likely be forced to introduce tariffs. So you can see how this could spiral out of control pretty quickly. On the other hand, as I said, the other proposal was to put 10 or 20% tariffs on everyone else to force everyone to the negotiating table. Now, it's not quite clear to me what is meant to be achieved. It's quite possible that in Trump's mind, the idea here is to reduce the trade deficit. This is probably not going to work economically just by imposing tariffs. If the idea is to say, hey, look, I'm trying to defend the American worker, I forced these countries to sit down and negotiate, and we got a deal. That's certainly another possibility. So it's not quite clear where exactly trade policy is going to go. The thing to watch out for is beyond the rhetoric that we'll necessarily see over the next few weeks and months is who will get appointed as the USTR. So who will run trade policy on behalf of the administration. But just to reiterate, so the proposal, the initial thought here, at least voiced as on the campaign trail, was 60% on Chinese imports, 10 to 20% on everybody else. Now, if that happens, this would have a significant impact, basically in two ways. One is it would of course impact the exports of many of these countries quite severely, depending on how dependent they are on the US market. And secondarily, if it's not clear where trade is going to go, it will create uncertainty, and not just in Europe and Latin America and elsewhere, but really around the world. So we have to assess how this then impacts investment decisions and economic confidence. Very difficult to say, of course, at this stage, but these are the things that we should be having a close look at. Just quickly on the Europeans say that they're ready and they're willing to retaliate against US tariffs. If you recall, during the first Trump administration, there was again a US protectionist threat, and the head of the EU Commission went to Europe and said, well, okay, let's negotiate a free trade agreement. And so the US put many of the auto tariffs, not the steel tariffs, but the auto tariffs on hold, and the negotiations never really went anywhere. But I think there's wiggle room to negotiate. And I also do think that, yes, there's an America First rhetoric, but there's also still a lot of Republicans and Democrats who, yes, they might be leaning more protectionist, but at the same time, they really don't want to have a global trade war. A quick final thought on this one is we always assume that the US president, or not we, but the press often says, oh, well, this is what Trump and the administration can simply impose across the board tariffs. Politically, and here I'm coming to the domestic institutional constraints, it's not quite as simple. So first of all, potentially you have Congress to contend with. So you can do this in one of two ways. Either you get Congress to legislate tariffs across the board, which may not work, is my guess, or you have to invoke emergency powers. So that's probably the way to do this. Beyond that, the trade statutes in the United States do not allow the president to impose across-the-board tariffs. The only way you can do this is by invoking emergency legislation. And then the question will be, well, how credible is that threat and how long would this hold up in court? The answer probably is that if you really, really want to do this, you probably can do it and you probably can keep them in place. That's my best guess, but I'm not a constitutional lawyer. But my whole point here is we should also always look at the domestic institutional and political constraints a president faces when he pursues foreign policy and foreign economic policy. And so, yeah, and then beyond that, I think we will see more friction around, for example, digital trade. We will probably see a breakdown of the tax agreements that were reached in 2021. And that goes in line with, the experience of the first Trump administration, which is transactional, which is theoretically focused on America's advantage. So exploiting America's relatively greater power and other countries' greater vulnerability to get them to the negotiating table and negotiate. What we didn't see, though, again, is we didn't see a complete breakdown of these relations, and we didn't see a complete breakdown of the overall economic relation and trade relationship between the US and other countries. So we'll see how that works, but I just want to sensitize you to the fact that this is not a black and white thing. There's still a lot of moving parts. It depends on who gets appointed, and it depends on how serious the administration is about these policies. Another quick word on economic policy. So what we will be seeing, and this is no different from what we saw under Biden, it's no different what we saw under Trump 1, we'll see a continuation of economic policies or certain types of economic policies that will remain focused on national security. So starting with the Trump administration, potentially with Obama, but certainly under Trump, we saw a tightening of investment restrictions. Now, mostly they target China, but we also saw under the Biden administration restrictions on outbound investment, again, targeting China. But what you see here is increasingly this potential move away from like the free flow of capital and free trade, while not across the board and perhaps arguably not all that excessive, also is happening in a much more targeted way. But that's happening not because of domestic trade politics or what was being said on the campaign trail or to like win swing states in the Midwest. This has been a long-standing policies of both Democratic and Republican administrations, which need to be understood in the context of US-China competition. And precisely because the people that we see now being appointed to senior positions in the US government, because they are so hawkish, I would expect a significant tightening of these policies as well. But what I'm saying here is they wouldn't be all that different from what they would have been had Harris won. So there will be increasing focus on export controls as well. We saw this under Biden, for example, when he imposed export controls on various products, including semiconductors, which then forced the Europeans to apply to comply with some of those export controls. So I expect a further tightening of both investment controls and export controls as well, in addition to the more protectionist policies on the import side. This will mostly impact national technology and areas that are either dual use or might provide China with a technological advantage. But this is exactly where we're going to go. So often you might have heard this. This is discussed in the context of decoupling. I'd like to think of this more as a de-risking. So there, as of now, there has been a long-standing policy to de-risk certain economic sectors, again, technology, mostly AI, nanotechnology, and all other areas that are potentially technologically important and can give a country a significant advantage in the military space, but also to some extent in the economic and technological space. So this is going to continue. You may remember Jake Sullivan, the national security advisor under Biden, he talked of a small yard, high fence policy. So the idea here was the US will broadly remain open, including towards China, but there will be certain sectors that will be ring-fenced and where there's very little to no trade. And Trump has said as much on the campaign trail, and I'm pretty sure he's going to go down that path as well. Now, why does it matter? Well, it matters to the extent that in certain instances, this might impact third parties. So I just mentioned the Europeans and the Dutch semiconductor producers. By introducing and relying on what's called a foreign direct product rule, the US effectively was able to force this particular semiconductor machine maker to also comply with the export controls. So there will be a risk, and I don't have all the answers here, but there will be an increasing risk that there's pressure coming from the US to align on a whole range of national security-driven foreign economic policies. So that's something I think to bear in mind. I'm thinking also, I'll get to this in a second, I'm thinking also of, for example, Chinese investments in ports in Latin America, like what we saw in Peru, for example. I think the next administration will take a much more aggressive stance towards those sorts of questions. Now, what this will then imply for Peru-US relations, I'm not entirely sure, but they will not just look at this and say, that's fine. There will be increasing pressure coming from the China hawks in the administration. And then I just a few concluding thoughts, what are the risks and opportunities? So just speaking from a financial perspective, you will get an expansionary fiscal policy because of the tax cuts, most likely. You will then get higher inflation and higher interest rates in the short run, at least. You might also get most likely higher growth because of an expansionary fiscal policy and deregulation. So I'm not saying the Fed will stop cutting rates. I think they'll cut another 25 basis points in December. They will probably cut a little more next year. But the risk now is that rates will not fall as fast, or they might not even fall at all, depending really on the size of the fiscal stimulus and the size of inflationary pressures. Now, clearly, trade restrictions also don't help. I've spoken to some friends recently, and they're worried about the price of their iPhones. So if the US imposes tariffs on iPhones, they're going to have to pay more for this unless there's an exemption for iPhone imports from China. So overall, I think this will boost economic growth in the short run in the US. In the longer run, there could be an issue around fiscal sustainability and higher interest rates. And of course, if you get into a real trade war scenario, then the US is also ultimately going to use in the medium term, which inclines me to believe that probably it will not be as bad as was suggested in the campaign trail, not least because there will be some pushback to say, yeah, one thing is to pick a fight with China, but like, why don't we have to have a global tariff war? No, but this is just pure speculation at this point. We have to see who comes in. I just want to flag it as a risk. What I would also say is that this is basically not very good news for emerging markets and developing countries. It's not really good news for the global economy, because if the US introduces very high tariffs and the dollar increases and rates remain high, this is not great for economic growth in those countries. Think of China right now that's struggling with like weakish growth. Think of the Europeans that have been teetering on the brink of a recession since the Ukraine war. They're in a vulnerable position cyclically. And if they were to face significantly higher tariffs from the US, this would worsen the economic outlook even further. And as always, when you get a strong dollar and high interest rates, particularly now in a context where you might also get trade restrictions, that's bad news for a lot of emerging and developing economies, because they have dollar debt, which then means they have to pay more for their debt. The debts become more expensive from a local currency perspective. And in addition, in this unique scenario, it might be harder for those countries to export to the United States to earn the dollars necessary to service their debt. Now, I don't think it's going to have an impact on everyone, of course. It's not going to have a massively distressing impact on, say, countries like Chile or even Mexico, even though there will be some market repercussions. But this could be a much, much more of an issue for developing economies in sub-Saharan Africa and elsewhere that are already in a significantly distressed situation financially. And now they're facing a scenario where it might be harder for them to export and they face higher financing costs. So this would be not particularly good news for them. And so I'll just end by saying that I do think if I were to sit in Latin America, particularly in South America, not so much Mexico, the things I would look out for is yes, trade policy, of course, that requires monitoring, but also the national security-led economic policy agenda of the United States, because as I said, there will be, I think, increased pressure for many countries to align, or for example, not to like allow Chinese investments in certain sectors, be it in the Mexican automotive sector, be it in the critical mineral sector in other countries. I can't tell you how far the United States is going to go, but I think this will be an overriding concern for the administration, and they will take some sort of action. So I think both policymakers in Latin America and private sector decision makers, they should keep in mind that the US-China conflict will be the driving theme over not just this administration, over the next few administrations, and third parties in Latin America, but also in Europe, they should really think hard about how they can navigate this conflict that is not going to go away and might even turn more hawkish over the next few years under the Trump administration. And I think I'll just leave it there and see if there's any questions.
Well, Markus, thanks so much for your clarity, for your concepts, for giving us an overview of these relationships that are emanating from a new Trump administration. I have a few questions here. I'll try to paraphrase them because they're a bit long. You know, based on what you said in terms of, you know, trade between the US and the world, and maybe the imposition of tariffs and all that, Chile has been putting a lot of very strong initiatives on what we call the critical minerals, lithium and other. Do you think this could prevent, or do you think these critical minerals could be also affected by the imposition of tariffs by the Trump administration?
I mean, that's a very good question. Probably to the extent that the US relies on the import of Chilean-produced critical minerals, it would make a whole lot of sense to exempt those controls. I think, on the other hand, so this is an area where it's much, much harder for the US to be aggressive, because in a sense, the reliance means it means higher costs for you. But I think what is much more likely in a scenario when it comes to rare earths is, to the extent that the US perceives it to be in its interest, it will probably try to like support investment in those areas. So I think one thing I didn't mention is that, of course, third countries, they might come under increasing pressure from like the US and China to sort of pick a side in some instances. At the same time, of course, they also have to some extent more room for maneuver to try to, I wouldn't say play one side against the other, but say, look, we have this, so if we find a cooperative agreement, maybe we can extract more benefits from this. But I think the short answer is, to the extent that the US relies on critical mineral imports, I think they're very likely going to be exempted, because it doesn't make sense to, it's like iPhones. Why tax iPhones if it hurts you? Now, what I would say, taxing imports, economically speaking, you're always going to sustain a loss as an economy, but certain parts of the economy will benefit and others will not benefit. But here, since we're talking national security, my guess is Chile would be exempted, but that doesn't mean that Chile could not face potential pressure from the US administration to say, hey, you know, why is a Chinese company buying this? So I think this is probably a conversation that will take place, to the extent that Chinese investments in, say, rare earths and rare minerals in Chile are seen as a security threat by Washington.
Thanks very much. This is a second question about, do you think that Trump's economic policies might mean a major role or a more important role of China in the region, in the Latin American region?
Yeah, I mean, so if we play this through as a scenario, if the US really is serious about imposing 20% tariffs on most imports from most of the world, again, we'll have to see whether that actually happens. Well, then two things are going to happen. One is Latin America will find it relatively easier to export to China, and China will find it more attractive to export to Latin America. Now, of course, that also applies to Europe. But yes, to the extent that the US if the US really fences itself off from the rest of the world, then necessarily the trade relationships between all the other third parties will become closer in many, many ways. Now, of course, that can create some problems, as I mentioned, particularly in the European case. If there's even, as you know, there's already a trade conflict going on between the EU and China. If you then get even more Chinese exports that go to Europe, there will be even more pressure on them to take potentially protectionist measures. On the other hand, we've seen this as well, there's also a greater incentive that if the US imposes tariffs, these other countries have a greater interest in cooperating on like not taking protectionist measures, which is precisely why the Europeans and China are talking about potentially withdrawing or like settling the current trade conflict about EV exports from China to Europe. So there's an incentive for third parties to say, if we can't trade with the US, let's see if we can find a cooperative agreement and trade more with other countries so that we can sustain our growth and trade.
There's a question that moves a bit more into the political side, which says that, you know, in the first Trump administration, Chile was without an ambassador for almost the entire period. The fact that Trump has been seen or there's some more closeness, for example, with countries that have more of a right-wing president, such as Argentina, do you think that could have any effect on economic or trade policies with Chile?
I mean, I think it's a two-edged sword, but generally it's good to have an ambassador that sits in Santiago and is able to talk to the State Department and bring Chilean interest or like US interest in Chile to the conversation in Washington. My sense is, you know, that's was true for the first Trump administration. And let's be frank, I think it's been true for many, many administrations over the past few decades. The interest in Latin America is very, very limited, particularly the further south you go. So the US largely views Latin America through the prism of migration. And secondarily, it sees it and will see it even more so through the prism of US-China competition. So I think this is where the greatest risk comes from. But clearly, you would want to have an ambassador so that Chilean concerns can be related to Washington and there can be a conversation about US-Chilean relations. On the other hand, of course, you might say, well, depending on the Trump administration's approach to the world, maybe sort of not being noticed is not a terrible thing for a little while. But I would say, yeah, broadly speaking, it would not be very good because number one, it shows the lack of interest on the part of the United States in a country that has no ambassador. If I'm not mistaken, I think Saudi Arabia didn't have an ambassador either during the first Trump administration, but I could be wrong on this. On the other hand, you don't want to draw too much sort of negative attention, but I don't think that's necessarily going to happen because Chile does not have a large, extensive trade relationships from the Americans' point of view. So therefore, I think it will be less bothered, except potentially when it comes to like Chile's relationship with China as far as it pertains to national security. But yes, ideally, you want to have an ambassador that can relate Chilean concerns and US-Chilean interests into to Washington.
Good. Let me take you now to a bit the relationship between, you know, the Trump administration and the European Union. The fact that there's not a leader with that strong presence in the European Union, do you think that is going to change the dynamics of that relationship between the new Trump administration and the current situation of the European Union as it stands now?
So first of all, I think the relationship will deteriorate, or let me put this, will come under strain. We almost invariably will see not just calls for higher defense spending in Europe, which, you know, even the Europeans now realize they need to spend more on defense. So that is happening. I think this will be the rhetorical side of it. But there's also, and that's also a shift that's been going on for some time. The US will be and is increasingly focused on China. So it doesn't want to expend significant amounts of money, though money is not overall the issue, and effort on Europe. Now, it doesn't mean it's going to pull out of NATO or anything, but it wants to focus on its priority, which clearly is China and Asia. And to that extent, it wants to scale back its commitment to, well, not so much its commitment, but the resource that it deploys in Europe. So if we take the first Trump administration as a benchmark, I think there will be increasing strains, first of all, when it comes to trade. I'm not sure exactly how this is going to play out. The Europeans say they're ready to like retaliate against any trade measures. But it's also true, and I think the question is hinting at this, is right now you are, I think it's fair to say, you're faced with a lack of political leadership in Europe. Not that it didn't help all that much during the first Trump administration, but now you have, just now we saw the announcement of German elections in February, so that we will not get a government until probably the middle of next year at the earliest, and then we'll have to see how strong and stable that government is. The last one clearly was not particularly stable. You look at France, where you have essentially a government with like no real party majority in parliament, and you have a president that is in charge of national security policy and foreign policy, but is clearly quite weak because of the political changes that we've seen over the past few quarters. So I think it's fair to say that you're facing a power vacuum, a leadership vacuum in Europe. If push comes to shove, they will somehow manage to like move closer together. But what you would need ideally is stronger governments domestically as well. I don't doubt for a second that the German and French government, that they have more or less the same interest when it comes to like preventing a trade war, for example. But you would need is leadership. And the other challenge I think Europe will face is that some of the more populist-leaning governments in Hungary and other places, they might even feel emboldened to like weaken Europe's stance on a number of issues. You know, Ukraine first and foremost, but there are also other areas where the impression, certainly in Budapest, is that now there's an opportunity to move closer to the United States, and this will undermine European cohesion. So, and last thing I will say is, in addition to the politics, Europe is in a weak economic situation. Economic growth is not really working. They are forced into a fiscal adjustment because of rules and because debt levels are really high coming out of COVID. And the German economy has been doing very, very poorly over the past few quarters because of high energy prices and the Ukraine-Russia shock. So Europe is really in a position where it is quite weak. It lacks political leadership. It's economically weak. So in that sense, they really, really have to make effort to rally around the quote-unquote European flag to be able to counter some of the potentially costly moves the Trump administration will make on trade and in the area of security.
Great. We have room for the two last questions. The first one is about immigration policy. So Trump has mentioned he's going to have a very hard stand on illegal immigrants. So the question is, do you think that this will somehow affect the flow of immigrants to other parts of the region, specifically Chile, if he's able to impose these immigration policies he has mentioned?
Yeah, that's a very good point. I didn't think of it in those terms, but it seems fairly obvious. If you can't get to the United States, then, and to the extent that you really feel that you need to leave your country, then you will try to go elsewhere. So you would probably go into most likely Chile, which seems more attractive places in South America. So I think this is a real possibility that this might happen. Now, just on immigration, I didn't speak much about this. One thing I failed to mention, of course, is that if you really severely cut immigration to the United States, let alone if you start deporting people who are in the United States illegally, this also is going to have an economic effect, because effectively you're reducing the labor force, and it makes labor more expensive. So this also could be a source of inflation in the United States. Now, I'm not a lawyer. I'm not exactly sure what is going to happen here. But broadly speaking, if you have less immigration economically, that is broadly seen as not a good thing. So we really have to see how serious the government is and whether, in fact, it's in a position to start deporting people. But I think it's very clear that they will really clamp down on immigration going forward, at the very least. And yes, to that extent, I think we looked at like 2 or 3 million people coming to the US, not all of them, of course, illegal by any means, but to the extent that you have people like who seek asylum, who flee nefarious circumstances in their countries, if they can't go to the US, they're unlikely to get on a plane and fly to Europe. If they happen to be in Central America, for example, then the chances are they move downwards to like Colombia. And I'm not exactly sure how they get from like Central America to Chile, but as you know, there's a fair amount of immigration and people moving to Chile as well. So the answer would be, I would expect there to be an increase in migration to other parts of Latin America.
Thanks, Markus. And the last question is very interesting. I think, you know, there's a new world order. There are many geopolitical crises happening in the world right now. And in some aspects, the investment decisions of most countries overseas are guided by, you know, the respect for the rule of law, or try to diminish risk or the uncertainty, how uncertain things are. But the question is more on, do you think the investments decisions or commercial strategies in the future will have to incorporate all these geopolitical issues or crises that are happening right now?
Well, I do hope that's already happening, very much so. And in fact, we are seeing this already. So there's a big debate taking place about, as I mentioned, decoupling, also about deglobalization, what's also called geoeconomic fragmentation, which is what I talked about, which is a situation where increasingly, so yes, it's to do with the weakening of the multilateral order, WTO, free trade, and so on and so forth. But it's also got to do with these national security-driven policies that, yes, do not seek to like decouple across the board, but they seek to de-risk. Now, what we've seen over the past few years, based on the data that we have, is increasingly, particularly when it comes to foreign direct investment flows, it might be slightly different when it comes to portfolio flows. But on the foreign direct investment side, we've seen flows increasingly being redirected towards countries that are close political and security allies. So particularly when you look at, I mean, Russia, of course, faced a huge amount of sanctions after 2022, but flows into China, they've diminished quite a bit. And flows from Korea and Japan that perhaps historically would have gone to China, now they're investing in other countries that are closer to them geopolitically. And if you think about it, particularly after Ukraine, that makes a whole lot of sense. You really don't want to be caught holding large investments in a country that might end up on the other side of the geopolitical divide, which is one reason why we've seen diminishing flows into China. Now, in all fairness, part of this diminishing flows can also be explained by the fact that China's economic outlook has weakened and they're going through a significant period of rebalancing and uncertainty, but particularly in the tech space. And by the way, that applies in this case, not just to FDI, but in the tech space also to other types of financial flows. We see, I do think we see a decoupling, particularly now it's going to get worse because Congress and a hawkish administration will say, why are US companies investing in China and potentially allowing for the transfer of technology? So expect there to be a clampdown and expect there to be, particularly in sectors that are seen as national security relevant, technology, rare earths, and other areas, for there to be an increasing focus on this. And this is exactly why investors should very, very much try to understand where things are going in Washington and where the US-China relationship more broadly will be developing towards in the next 4 years.
Well, thanks very much, Markus, for your presentation.
My pleasure.
Gave us a lot of points to discuss and reflect on, and I hope it met the expectations of our participants. Just as a note, we had 95 people actually attended your presentation. Also, I'd like to thank Paula Estévez for participating in the event and AmCham support. This has been a wonderful collaboration between the Columbia Global Center and AmCham. We will continue with these public interest talks and webinars in the future. And again, Markus, thank you so much for your clarity and for your concepts. Thanks a lot.
Thank you for having me. My pleasure.
Bye. Take care.